Good afternoon, ladies and gentlemen. Today is Monday, the 6th of February. We are glad to present our weekly analytical review for major Forex instruments. Last week the market negatively reacted to the US Fed meeting and the EUR-USD pair reached the level of 1.0825, which coincides with the Fibonacci retracement 38.2%. This level is seen as the key for the bulls. The breakout of the key level would allow the pair to go further up to the levels of 1.0960 and 1.11. However, the beginning of the correction to the levels of 1.0550 and 1.05 is more likely, confirmed by the stochastic that turned down. In this situation, short positions can be opened below the middle line of Bollinger Bands, at the level of 1.07 with the targets at 1.0550 and 1.05. Long positions could be opened after the breakout of the level of 1.0825 with targets at 1.0960. The pound-dollar pair went up last week to the level of 1.2710, which coincides with the Fibonacci retracement 23.6%, but then began to correct towards 1.2410, which coincides with the middle line of the Bollinger Bands. If this level is broken down, the pair will drop to the levels of 1.2260 and 1.21. On the other hand, the bounce of the middle line would lead to the growth to the levels of 1.2710. Technical indicators suggest the overall decline. Stochastic is directed downwards. MACD histogram decreases in the positive zone. In this situation, short positions could be opened below 1.2410 with the targets at 1.2260 and 1.21. Long positions should be opened when the price rebounds off the level of 1.2410 with the targets at 1.2560 and 1.2710. Now let's look at the dollar-yen pair. Last week the pair fell to around 112.40. which is now seen as a key level. If this level is broken down, the pair would continue to fall to the levels of 111 and 109. However, we cannot exclude a reversal to the levels of 114.40 and 115.60. Technical indicators show limited capacity of downward movement. Stochastic approached the oversold zone. The MACD histogram is increasing in the negative zone. In this situation, short positions can be opened below the level of 112.40 with the target at 111. If the price rebounds from the level of 112.40, long positions could be opened with the targets at 114.40 and 115.60. Australian dollar-US dollar pair reached the level of 0.77 last week, the breakdown of which may push the pair up to the levels of 0.7755 and 0.78. However, a more likely scenario would be a continuation of downward correction to the levels of 0.7610 and 0.7520. This scenario will depend on the decision of the Reserve Bank of Australia on interest rate, which will be announced on Tuesday. Technical indicators give contradicting signals. MACD histogram is growing in the positive zone, stochastic is turning within the overbought zone. In this situation, short positions look preferable. They can be opened at the current price with the targets at 0.7610 and 0.7520. The breakout of the level of 0.77 would make long positions possible with take profits at 0.7755. Last week gold was rising towards the level of 1230. The breakout of this level would allow the pair to go further up to the level of 1250, which coincides with the Fibonacci retracement 38.2%. In the case of reversal at the level of 1230, the pair may return to the levels of 1211 and 1194. Technical indicators give contradicting signals. MACD histogram is growing in the positive zone. Stochastic is turning within the overbought zone. In this situation, long positions can be opened above the level of 1230, with the target at 1250. If prices rebounds from 1230, short positions would be relevant with the targets at 1211 and 1194. This is all for today, and good luck with your trading.